Thank you, Chrissy, for that introduction, and thanks to Vertical Events for good oil. It's been a fantastic conference so far. So we are Invictus Energy. We're a fairly new company in the market. We concluded our transaction to acquire the Cabora Bassa project in April, and that is an 80% equity interest in Special Grant 4571, which is located in the northern part of Zimbabwe, near the Mozambique border. It's 250,000 acres, and it contains the largest seismically defined undrilled structure onshore Africa. The Mzarabani prospect is a very simple four-way dip closure or anticline that's mapped over multiple seismic lines. The acreage was formerly held by Mobil in the early 1990s, and they conducted an extensive exploration program. They spent around $30 million acquiring 2D seismic, geochem, gravity, and aeromag data, amongst many others. And this project has been locked away for the last 25 years since Mobil left Zimbabwe. And that's mainly been because of the political considerations in Zimbabwe. And fortunately now, with the change in government, Zimbabwe is opening back up for business. And we've seen a dramatic improvement in the conditions there. From Mobil studies, they concluded that all the elements were there for a working petroleum system. However, they determined that it was more likely to be gas than oil. In the early 1990s in onshore Africa, there was no way to monetize gas. There'd been some already discovered large gas assets that had been stranded. However, that situation has now changed. So we completed the acquisition we announced it in April, completed it in June. We raised $4.5 million in a heavily oversubscribed placement. We are fully funded to get this to a farm-out stage, and our work program's underway with the contractors currently in Zimbabwe. We've got a very low-cost work program to mature this asset to farm-out or drill-ready stage, and that consists of reprocessing this legacy data that Mobil left behind in a custom-built climate-controlled room at the Zimbabwe Geosurvey that's been sitting there for 25 years untouched, and we'll be targeting multiple regional players for farm-out in early 2019. Just with a corporate snapshot, we've got around 365 million shares on issue, 101 million performance shares to come, and 35 million options. The directors and management hold a significant portion of the company. Our directors participated in both the placement and have bought on market. We eat our own cooking, and our top 20 shareholders account for nearly half of the company. At a share price of 5 cents, our market cap is approximately $8 million with an EV of around 14. In terms of performance milestones, this is not a lifestyle company. We're getting after this and chasing it. We've got an aggressive work program to mature this project and move it forward. In terms of what's going on regionally and onshore Africa, Karoo-aged or Permo-Triassic rifts are starting to gain more attention. And the Cabora Bassa Basin, where our project is located, possesses very similar characteristics to some of these interior rift plays that have been very successful in places like Uganda in the Albertine Graben, Kenya in the Lokachaw Basin, as well as the Perth Basin and Cooper-Eromanga Basins here in Australia. Regional license rounds have attracted players that were previously chasing the tertiary rift systems, and now we're starting to see them move into these older rift systems. We're the first mover into this portion of the Greater Zambezi Valley rift trend that extends from Namibia through Zimbabwe, Zambia, and out to Mozambique. And we have picked the eyes out of this basin. Our country manager, Brent Barber, ran Mobil's exploration program for them in the early 90s, and so he knows where all the bodies are buried. So we've picked up the best part of the basin and progressing from there. In terms of the regional Karoo-aged discoveries, what we can see here is that these systems are able to host very large and material discoveries and contain both oil and gas. Caleb and Halala gas field up here, 6 to 8 TCF. But one of the more exciting and more recent discoveries is this Imbunya discovery in Tanzania. It's been made by a private company in the UAE called Dodsel. There's not a lot of information on this. It's a lower Triassic discovery, which is the same age as what we're chasing, and they're estimating that at around somewhere between 2.7 and 5.9 TCF. It's still in its appraisal stage at the moment. And then, of course, on the liquid side, in Madagascar here, you've got multi-billion barrel oil fields, both heavy oil and tar sands. In terms of the stratigraphy that exists in the Cabora Bassa Basin, it's a very, very thick sedimentary sequence. In some parts of the basin, you're looking at up to 12 kilometers of sediment, and that sets up multiple opportunities in different parts of the basin to target. Our primary target, I beg your pardon, our primary target is this Upper Angua alternations member through here in the lower Triassic, which is part of the Angua sandstone. That contains everything we need in terms of a petroleum system. So we've got source, reservoir, and seal all present within that. It's around 2,000 meters thick in the portion of the basin that we're exploring in. So we've got a lot of bites at the cherry here. And there's also many other secondary and tertiary targets that we can chase in this basin too. In terms of the play elements, so as I mentioned before, Mobil concluded from their work that all of the play elements exist in the basin. So in terms of source, in the Upper Angua that we're chasing, we've got at outcrop 46 meters of oil-prone shale. The maturity of it is capable of generating either a very rich gas condensate or wet gas, or a low sulfur waxy crude similar to what you see in the tertiary rift systems. The seal capacity of the Angua samples that they obtain from outcrop are capable of holding back hundreds to 1,000 meter columns. Reservoir, the Angua sandstone is an excellent reservoir. Again, all of the stratigraphy outcrops further west in the basin, a few hundred k's away, and that really de-risks a lot of this play, because we're not guessing whether these elements exist. We can go and physically sample them at outcrop. And the Angua sandstone, which is our primary target, has very conventional reservoir properties, excellent porosities from the high teens to mid-20s, and permeability in the hundreds to over 1,000 millidarcy. In terms of trap, there's this huge Mzurabani anticline, which is over 200 square kilometers under closure, 500 meters of vertical relief, and these anticlines are the simplest and most successful types of play in these types of settings. And with the migration from when oil and gas is generated, we've got source rock interbedded within the Angua, as well as these big synclines which feed up directly into the big traps through here. And as you can see, we've got, that's our primary target at the Upper Angua. We've got the Lower Angua through here, and also the forest sandstone. So these are stacked prospects as well, and we've got more than one bite at the cherry. In terms of the maturity modeling, something that's in its early stages in our technical work looks really promising. One of the conclusions from Mobil's work that they had was that possibly timing was a key risk in terms of expulsion and trap formation. However, our new basin modeling work suggests that it's expelling at present day and it's expelling at present day, and so that timing risk essentially is minimized. You can see here that the green colors are the more oil-prone areas. The dark red is dry gas. This is at the base of the Upper Angua, so at around 4,000 meters, and we're starting to enter the wet gas window at present day. Now, this is a seismic line showing this huge four-way anticline through here. So you can see a very, very prominent structure and absolutely massive scale, 200 square kilometers under closure, and a stacked prospect with, we've got the forest through here, our primary target, the Upper Angua, and the Lower Angua as well. The seismic quality in the Cabora Bassa Basin is excellent. We're really excited about the reprocessing work that we're going to start undertaking shortly, and we think it's going to reveal an even better image. And whilst everyone is looking at the elephant in the room in terms of this big anticline, one of the other things that we're starting to see are play types that have been successful elsewhere in these rift systems. So, for example, this rift flank play through here, as Tullow call it in the Albertine Graben, or Africa Oil refer to it as the string of pearls play. So we're starting to see different play types as well in these basins. Typically the very, very big ones, like Mzarabani, happen in the heart of the basin, and then up against the basin bounding fault here, you get those string of pearls plays that come into consideration as well. Here's a better look at this Mzarabani prospect. So, over 200 square kilometers under closure. To put that in perspective, the Waitsia gas field, which is the largest onshore gas discovery in Australia in 40 years, that closure is around 65 square kilometers. So you're looking at something that's, that's pretty big by any standards. It's got a huge amount of vertical relief, somewhere between 500 and 700 meters. And so as soon as you start to add any net reservoir into a structure that size, the numbers get very, very big, very, very quickly. In terms of the reservoir properties, these are mobile estimates that we're looking at here. This is just for the Upper Angwa, our primary target. Very, very conventional reservoir properties, high porosities, high gas saturations, good reservoir pressure. If this prospect were to come in, it would flow at very, very high rates, and we'd have very, very good recoveries from here as well. As you can see from the condensate gas ratio as well, a very, very rich gas, so a CGR of 112 barrels per million scuff, which is amongst the best fields on the Northwest Shelf are around the 50 to 35 mark, so a lot more liquids per molecule of gas as well, which really helps the economics. In terms of infrastructure and markets, we are located up in this northern section of Zimbabwe through here. This is a map of existing and future infrastructure. We've got multiple options for monetization, including gas to power, condensate stripping, and shipping that to market. There's excellent infrastructure in Zimbabwe. The roads are very good. We're 2 hours by road, which is a fully sealed road, all the way to the well site virtually. And so evacuating condensate and gas is a lot easier than it used to be. A little bit on Zimbabwe. The political situation in Zimbabwe has improved dramatically, and so have the investor conditions. The black economic empowerment legislation that was holding investment back has been done away with. There's 100% foreign ownership allowed. There's a guarantee of investor rights, and the government is actively encouraging foreign investment with provisions such as a 5-year tax holiday and a 15% corporate tax rate. Gas royalties there are 2%, so you're looking at very, very good fiscal terms. In terms of our forward work plan, we're reevaluating all of that legacy mobile data. These are the field tapes that we're starting to transcribe and reprocess out of the GeoSurvey. From there, we'll conclude our own technical work, and ultimately we'll produce our own prospective resource report towards the end of Q4 and begin our farm-out process early next year. And in terms of summary, a massive prospect, but we're starting to map things elsewhere within our acreage. We've got excellent in-country relationships, access to future and infrastructure, and a very, very low-cost and high-impact work program that we're currently executing. Thank you.
Scott McMillan, ladies and gentlemen. Thank you so much, Scott.